Dear friends, today we're going to talk about the most important news for the whole cryptocurrency market. We will talk about the news of the institutional bulletin that Ramp raised $70 million and Archax raised $28.5 million. And let's talk about the rest of the important news. You're on the Make Money channel, let's figure it all out. The cryptocurrency industry is attracting a growing number of institutional players. This can be seen in new investments in the infrastructure and in the increasingly close attention that companies are paying to Bitcoin as an asset class. Infrastructure crypto startup Ramp raised $70 million in a Series B funding round. It is led by Mubadala Capital and Karelia Capital, with participation from the venture firm Cogito Capital and the current investor Bulletin Capital. The core product of the London and Warsaw-based Ramp is a payment software development kit. It allows users to buy cryptocurrencies via debit and credit cards, bank transfers, and Apple Pay, both within and outside the startup's platform. According to Ramp founder Shimon Sipnevich, 70% of its payment volume comes from Europe and the US. The company is considering expansion options in Mexico, Brazil, Japan, and South Korea. Licensed British exchange Archax raised $28.5 million from its Series A funding round. Among the participants, Bitrock Capital, blockchain co-investors, and Thesis Foundation. The round is led by investment firm Bulletin. The latter manages $619 billion of assets and is the largest shareholder in the regulated exchange. Archax provides institutional investors with the opportunity to store and trade a variety of digital assets and securities. All this, my friends, tells us that institutionalists are getting more and more interested in cryptocurrency. And accordingly, this can have an extremely positive effect on the growth of Bitcoin cryptocurrency and the entire cryptocurrency market. Also, my friends, Pantera Capital claimed a minor impact of the FTX collapse on the business. The collapse of the Bitcoin exchange FTX has an insignificant impact on Pantera Capital's business. This is the statement made by the company's partner Paul Veredatakit. FTX founder and CEO Sam Bankman-Fried confirmed the liquidity problems, but stated that the exchange's assets exceeded its liabilities. According to Bloomberg and WSJ, the hole in the crypto company's balance sheet is up to $8 billion, and the company needs to raise $4 billion in funding to remain solvent. Coinmetrics experts suggested that a possible reason for the exchange's collapse could be the major financial assistance it provided to Alameda Research in the second quarter of 2022. WSJ sources confirmed that the platform provided about $10 billion to the firm, mostly from client funds. On November 11, FTX parent company, Alameda, and about 130 other affiliates, FTX Group, filed for bankruptcy. On the Pantera side, we had insignificant exposure on the FTX platform and got exposure to FTX as a shareholder primarily through the acquisition of our portfolio company Blockfolio, Veredatakit said. He said the more important challenge for Pantera was to find out the extent to which the collapse of FTX and Alameda impacted other companies in the portfolio. The Bankman-Fried structure had been actively investing in cryptocurrency projects, Veredatakit pointed out. The audit found that there were certain problems only for those firms that had deposits on FTX. Pantera is helping them through options, the company's partner emphasized. Next in the news, my friends, we have Michael Saylor confirming the MicroStrategy's course for further Bitcoin purchases. MicroStrategy is not giving up on its strategy of buying and hoarding Bitcoin despite the market's continued decline. Michael Saylor, the company's executive chairman, made the announcement about it, according to CoinDesk. On Thursday, November 10, amid the FTX crisis, the price of the first cryptocurrency tested the marks below $16,000, near two-year lows. At the time of writing, the quote has recovered to the levels near $17,350. Saylor acknowledged that the situation looked like a roller coaster for digital gold. However, he pointed out that Bitcoin had sunk to levels that are still 33% higher than the levels at the time of its first MicroStrategy purchase in 2020. The company's shares rose 38% during that period, surpassing such tech giants like Apple or Amazon, its founder emphasized. Our shareholders are winning, and we're going to stick with this strategy because it's working for us, Saylor said. After purchasing 301 Bitcoin worth $6 million in September, MicroStrategy's reserves reached 130,000 Bitcoins. The company has invested about $3.98 billion in the cryptocurrency. The current asset value is approximately $2.25 billion. In August, Saylor stated that MicroStrategy had made the right choice and Bitcoin had outperformed its competitors. He was referring to traditional assets like gold, silver, bonds, or the S&P 500 and Nasdaq indices. However, according to Blockchain Center experts' calculations, if the company had invested in Ethereum instead of the first cryptocurrency, it could have earned $1.6 billion as of early November versus losing $1.3 billion. Thanks for watching. Don't forget that we also have our Telegram channel, which is in the description below the video. Also, don't forget to subscribe to the channel and of course like this video. Make money!